Hi, you all. So, welcome to this free charting class. I'm so glad to have everyone here. I wanted to make it just limited space just because this is the first class that I host outside of EYL University, which many of you may know me from EYL. And yeah, I'm happy to be here. This is something I wanted to offer. I know the market has been incredibly volatile lately with just one day tariffs, the other day pause in tariffs. But just as a trader, I remember back, and if you're a trader, you probably remember back in 2022 when all this Russia and Ukraine war began. And back then, and if you actually just look here at my chart, the market was really consolidating right around here, right? Around this area, so around the 400s. And, we had been fighting for a while to get out of this area. So back when we started getting heavy news right when the market had retested this area of consolidation that we had broken down in uh, that we had broke down to retest. And so when all this news was coming out, this is where the market was at in this area. Really, it was just retesting this consolidation. So I remember trading back then, and I remember my bias. I had a crazy intense bias that the market was going to come back down, that this was a double top, and that we were coming back down, right? And it was really hard for me to let go of my bias. So that's something that as a trader I've had to just get better with and stronger is not being holding on so much to my bias, but rather following the technicals. And so that's why I wanted to host this class in hopes of anybody that may be struggling with kind of the same things that I was as a trader. Hopefully, this class will help you refine and maybe understand a little bit more your strategy and how you want to approach the market. I'll start off first with my disclaimer. This class is for educational and informational purposes only. Nothing shared during this session should be considered financial advice, investment recommendations, or a solicitation to buy or sell any security. Trading and investing carry risk, and past performance is not indicative of future results. Always do your own research and consult with a licensed financial professional before making any trading or investing decisions. I myself am not a licensed financial advisor yet. Okay, so a little about me before we get into this class. I've actually been trading for 4 years. I think I started right around where everyone else kind of started was in 2020. And it was something that I just really got into. I really like to trade. I lost a lot of money and I was happy doing it from the comfort of my home, I guess. But no, I actually had been in law school at the time, and Biden's administration had gone after those private institutions that they felt like were overcharging students. And so they closed down my law school after my first year of law. I have a business in the city I work in, so it didn't really make sense for me to move out of my city at the time to continue to pursue law school. And I also recently had my son who's three. Well, he's turning four now. I had my son too, so it was like I just felt like I didn't want to go back to law school, and that's right around the same time that I found trading. It's one of the things that I've always kind of really been good with numbers and just finding patterns. So I think that's kind of one of the things that helped me. And in the beginning, I was dealing with just a lot of my own personal things. Like if you're a trader, you know that trading will refine you, your personal self trading as anything any skill set you pursue, it will test you. It will test your tenacity and if you're really serious about it. And trading did that for me. And I just stuck with it. I refused to give up. And I will say now, about probably 2 years ago, I felt myself finally, it was like things just started to click for me in a major way where I understood what I was seeing in the charts and I understood that my success in trading would be due more to my psychological and being and how I was handling my trades rather than the technical, but also those biases like we were talking about. And so, yeah, I started to get really good. I was helping my family and my friends and just understanding the market more. I would have like Zoom classes at my house or like just with friends would come over and I would just always be talking about the market. It was something that I really enjoyed. And fast forward, I ended up connecting with, if you guys have heard of Earn Your Leisure, they have an online platform called EYL University. And I started to teach with them, with their community. And it's something that I do now. And if you are looking for a community to trade with, I definitely recommend EYLU. It's a platform, they offer a lot of different just classes, whether it's on real estate, if you want to learn about real estate, if you want to start your own ebook, if you are getting into the restaurant business, trading, we have a trading community in there. We have a real estate club in there. I mean, it's a great community. I think it's 50% off right now too. So, I mean, this class is not to advertise, and I'm not getting paid anything to advertise either. I just think in general, it's a great community if you are looking for a group of traders to trade with. Um, so so yeah, let's get started. Yeah, like with all this tariff news lately, I know the market has been extremely volatile. So let's make it make sense. If you are new to trading, please this will be recorded. Like if you want to come back to it and watch this video, this class will definitely be recorded. And if not, hey, just let's take it as a meetup, right? So let's get started. So I usually start off on my monthly charts, just mostly so I could kind of zoom out, right? And just take a look at whatever the stock is doing. So if you look here to the left, you can see that this is SPY. SPY represents the S&P 500, the top 500 stocks here in the US stock market. And so you can see that pretty much we've been in an upwards trajectory. I think we can all agree ever since '09 when we had this big dip, right? '08, that the huge recession fears and all those things began, we made a huge drop, right? But if we had all been courageous enough to buy that dip, we would be all rich today because the S&P from 70, probably from around $80 that it was struggling to get past, it broke a high of 153. And now the S&P has gotten as high as 615, I think 612 area before now doing a pullback. But as scary as all this tariff talk can seem and all of these new, every day there's a new headline about what's going on in the market, you can pretty much see that the S&P 500 has been in an upwards trajectory, right? And this is one of the reasons that I think it's so important for everyone to have, even if it's one person in your family that knows how to trade. Because if you think about it, like black and brown people, we weren't taught to invest, right? We were taught mostly like we have been taught to consume, consume, consume. Like recently, I was just reading the ads today about like how China is putting out like basically all this propaganda, like all this Louis Vuitton and Nike stuff that we have premium sellers reselling items to us, right? Like this country, we're consumers, right? We've built a great nation off of consumerism. But when we start to hear all of these headlines and we think about the market and investing in the market, right? We don't want to get like we don't want to be the ones that got, right? So it can be scary to say, I'm gonna put my money in the market. Are you crazy? Do you hear all the crazy stuff that's going on in the world right now? Like my money is more secure in my savings account. Well, you can assume that, but if the market says otherwise, right? Like, and if you just look at this, even when we've had corrections, so we've had dips, we've always ended up finding support. Support you can think of as like the floor of a stock. We've always ended up finding support before carrying on higher, carrying on higher. And unfortunately, most people, when they want to buy the market, is when they're hearing all the headlines in the news talking about the S&P 500 and we're at 604, 615, hitting all-time highs. And everybody's saying, "Oh, now I want in. I need to buy Tesla. Tesla's at 400, but I'm hearing all this news about Tesla. Let's go to the Tesla chart. Oh, Elon Musk is going to take us to the moon, you guys. Like, we got to buy now." So here's everyone buying while banks and institutions are saying, "Oh, hell yeah, we've been in Tesla since 108." Even here, they could have grabbed Tesla at 140. At almost at 500, yeah, we're out of here. And everyone that was chasing Tesla, trying to get in, was liquidity for those big banks to exit their moves. And here, Tesla came back down from as high as it got us about 490, and it's dropped to almost 216 has been the lowest that it's recently dropped, right? More than half of its value. So I think that in general, like for us as investors, we have to become smarter when it comes to investing, right? We have to be able to control those emotions that make us want to buy high when sooner or later the market will need a cool down. And that's the importance of technical analysis, understanding when the market needs a cool down. Just understanding when the market needs a cool down and having the self-control to not buy and being able to read a chart and say, oh man, this stock is at an all-time high. Let me wait for a dip. Because even if you don't get the very bottom of that dip, you got a way better discount than, for example, if you had bought SPY at 610, recently it dipped all the way to 483. Who do you think in the long run is going to have a better return, right? The person that bought at 483 or the person that bought at 610? Like, obviously, if you bought some Jordans and you got them for $60 and your homie bought the same Jordans for 300, you're the one that's on the come up, right? Because you've got a $240 discount on that. So you basically, if you decided to resell those same Jordans 10 years later, you would ultimately make more money than he does because you bought them at a better, entered that equity or that asset, you bought that asset at a cheaper price than your friend. So I guess a way I could explain it. So when I look at a chart, one of the first things that I do, yes, I zoom out and look at the monthly, but I try to also kind of draw out those trends that I see. And what you'll see me do in this class a lot is navigate through different time frames. So I'll start off on what is called a top-down analysis. I usually start off on a monthly time frame, right? Like I said, to basically get a clear eye view, and then I'll start traveling like down to my weekly time frame. And this kind of helps me to be able to draw out trends a little more clearly. So I'll stay zoomed out like this and then I'll zoom in a little bit. All right, so let's go back to the monthly. All right, so so one of the things that we use, like when we're charting stocks, is we look for areas of support and resistance. I won't get into too much detail in this class, but again, resistance is the ceiling. So we want to look at where we want to find the areas that is the ceiling for the stock, right? Where people think that it's more valuable to sell there rather than buy there. And we want to find areas of support where people think that it's more valuable to buy at support than to sell at support, okay? So let's break this chart down. From the monthly chart, I'm gonna just take some levels from here that I find as support and resistance. Now, if you're part of EYLU, we actually had talked about this level here at 475. March 31st, we pulled up our charts when the last monthly candle closed, because last month, March's candle closed. Basically, like if we zoom into the to our price action now, SPY had this impulse candle, and then for 3 months, SPY had consolidated inside of this candle, making us believe, right? We could have believed, hey, this is a bull flag, right? The characteristics of a bull flag are this impulse move up, consolidation inside of this pole, right? And it even kind of fooled us because if you think about it, this was a breakout level for SPY, breakout meaning that this was a high, and we were kind of struggling because each of these candles represents 1 month. We were struggling for like we couldn't for 2 months get above 574, right? But this impulse candle was able to break above 574. And all of these three candles here were all respecting. Even though we pulled back, this wick basically means that price touched this level of support, but still buyers scooped it up and bought that dip up. And we stayed in this flag. Even in February, I remember telling the class, I'm like, I don't know, you guys, maybe SPY can go higher because look, so far on the monthly time frame, we're just squeezing, right? We're just consolidating inside of this flag, is what it looked like. Well, nope. Here comes March. And March, we actually ended up closing where we engulfed all actually 4, 5. So 5 months of price action, this candle came in and engulfed, right? And so I told the community, I'm like, you guys, like, and this is where I started to grab levels. Basically, we had closed right above 560, right under 560. So I told my community that I trade with, I basically where I teach, I was like, you guys, we ended up losing 560. That is giving me like we could come down lower, right? This candle closing where it lost this area of support, we could come down lower. So the levels that I told them to look out for SPY next was 523. Little did I know this was all going to happen like in 2 days. But I said, if we lose 523, look for SPY again. And I'm grabbing these levels just simply from, you see how like this candle broke out and basically had this consolidation, like basically a flag. And we able to break out. So I marked this next breakout level 523 here. If this was a bull flag, this was basically the bottom of a range because for 3 months we stayed right above basically 500. Even you could take it as a psych level, this 500, 501 area. But I told them all the while, I said, you guys, if you see SPY back at 475, don't think it's strange. Don't think it's strange that SPY comes back to 475. And I had said this weeks ago to my community because ultimately SPY on the monthly, if you one of the indicators that traders use to see whether an equity or stock is really oversold or overbought it's called RSI. If you go here on TradingView is actually a free, you don't have to pay for this. And I usually use this one here that says RSI divergence indicator. But basically, that indicator tells you if a stock is oversold or overbought. So if something's oversold, you can think of it as like top heavy. There's way too many people in it. It's top heavy. It's probably going to sell off. If it's something's overbought, oh, I'm sorry, no, vice versa. Overbought is when it's people. It's top heavy. It's way overbought. It needs to cool down. People are probably going to start letting go, selling off here. That's when something's overbought. Oversold is the opposite. So when you're thinking of something going up, you want to see it oversold, like right, like the last time that the S&P 500 was at over like super oversold levels was 2009, and we had this strong bounce from 2009 is what started this huge rally on SPY, right, from us being so oversold. So that's how powerful it is when you see on the monthly an oversold or an overbought level, right? So on the S&P 500, we were for a while we had been oversold, but we still kept on making new highs. So it was inevitable that sooner or later we would need to cool down, right? Because every time we've made a new high, and I'm going to zoom in here. Every time we made a new high, like for example here, 290 was a new high back in 2018. We had to pull back. We pulled back to what we call a 50-day moving average, 50 EMA, is what traders call it, and ended up finding support in this area. Again, here we made a new high at 324, right? And we ended up pulling back. We can even mark these levels. Again, here we made a new high, right? We got as high as almost 350. What is that? Like 346. We made a new high here, right? And we ended up breaking out. So notice that once we broke out from this level, we came and we made a new high here at 475. We couldn't get any higher here. And actually, sellers sent a signal here by this month closed as what's called a bearish engulfing candlestick. Bearish engulfings, you want to see these at resistance. And this was the signal that SPY was coming down to find support again. So where did SPY come to find support again? Interestingly enough, it came back to its last breakout area, right? So it came back to 350. Now, finally, SPY went to retest that 475 area again and actually was able to get above that 475 area, telling us that there were enough buyers present that found SPY more valuable than 475. From 475, we made this new high. So we could even mark this new high now. So that high is about at 604 on the monthly. So from 604, right, we're seeing SPY. SPY's now closed with this engulfing here. Now, if in the past, because you can almost say there's like a bearish engulfing pattern here, just like because how this candle engulfed 4 months of price action, here we engulf 1 month of price action, and look at how we came to retest this level that we broke out from. So that's why I told the people in my community, I said, if the people in the community I trade in, I said, even if SPY came back to 476, that's actually not strange because it's one of the rules, right? In trading, it's like when we break out of levels, we usually come back to retest them. Why? Well, because if you're thinking about a big bank, they want things on a sale too. They want to buy on that Black Friday sale. They want to buy when things are discounted. So is it in their best interest to get into SPY at 472 when it was at this high? No. They waited till they came back to levels where it sold off. And here the banks were waiting to step in. Here they stepped in and were able to send SPY higher. Here we even read it. I mean, if you're into the financials and you're hearing the news, I saw all these memes all over the place. Oh, Warren Buffett sitting on cash, Bridgewater selling this. Like we started hearing a lot of news, right, about different investors selling the positions, selling equity in like Plantier. We heard there was a lot of different, even NVIDIA. I heard Jensen's company. A lot of these people were selling their positions, right? Well, the S&P was way overbought, right? So it's not strange for them to get out of their positions. Now, where's a better deal? They don't want in here. They want in here at the discount. Okay. So those are the levels I'm going to grab for the monthly. Let's go to the weekly. And so let's zoom out here. So I can grab, because there is a trend line here. All right, let's see. I guess we could say, let's try to do it like this. I think it's a little tighter than that. There's like trend lines within trend lines. Let me delete that one. I like this one more. Okay, I think this is a good reflection. So trend lines, the way you want to basically confirm them is Because trend lines, just like these horizontal levels act as support and resistance, trend lines also act as support and resistance, right? All right, so every time we touch this trend line here at the top, we pulled back. You can see here we touched, we pulled back, touched, pulled back, touched, pulled back, pulled back, pulled back. So that's right around here, the beginning of the year. I was like, this is where I started kind of alerting. I was like, I don't know, you guys, I'm cautious because we're at the top of this trend line. Even now, we're on the weekly chart. Our weekly RSI was getting pretty extended too, right? And so we kind of just chopped around here where we ended up forming this double top. All right. And so double top at resistance, that's a bearish pattern. All right. So I'm drew this bottom trend line. So we were basically in this channel, or you can call it almost a rising wedge. But you can see here at the points on the bottom where this level down here acted as support. Yes, we temporarily lost this, but we ended up forming this morning star and reclaiming this trend line, right? And even here, this was back in August. I remember, if you guys remember that week in August, we had that bloody Monday, but we ended up just gapping down to this trend line, the bottom of this trend line with the EMA and bouncing. So now, once we lost, and I'll zoom in here now to the weekly time frame. So just the fact that we lost this channel, right? We lost this channel, but not only that, and this was all around, I think when we started getting the liberate. No, this was the liberation week when we had the tariff announcement. But we lost this channel and we were consolidating right at the 50 EMA. Look at how this candlestick here ended up losing the 50 EMA. And if you know the rules with trading, basically they say once you lose a 50 EMA, you go to the 200 EMA. So this candle, once we lost this 50 EMA, this was the week that we had the tariff news. And then this was last week where we ended up gapping down almost perfectly. And remember the monthly chart, this is that retest area. But not just that, this is my 200, the 200 EMA, right? So almost perfectly, we ended up touching that. Now, last week, we did end up bouncing from this 200 EMA. But I guess we could just say, so once we lose a level, we will come back to retest it. So last week, even though we bounced from the 200 EMA, we were never actually all the way to 560. Even if the SPY came back all the way to 560, all it's doing is retesting. Unless SPY started to reclaim 560 and started to reclaim these levels higher than 560, we couldn't say that we were going higher because now we see we've lost this channel, right? We've actually lost this channel. So I'm careful being, like I said before, I won't be too biased because if we go back to the monthly, this is a major retest level, this 475, right? This is a major retest level for SPY on the monthly chart. I'm curious to see how this monthly candle closes. We won't know for another, 14 days. The month is only halfway up. But so far, if you're just following this chart like week by week, just know where you're at. Like if you go back to your charts and after this class and you're trying to figure out kind of like where am I when it comes to the market, no matter what they say in the news, like because this week we also had that this week was the tariffs were announced. This green week was that we had a pause in tariffs, right? So if you're just going by the news, you're thinking one day you're bullish, one day you're bearish. No, remember where you are. Like the headlines, they don't have to spook you, like for you to make a plan. Well, something that I usually will do is like even just marking these weekly candles will help you kind of navigate where you are. So all the way to 550, if you zoom out, like sometimes you just need to zoom out and look at things from like a bigger perspective. If you zoom out, so far this week we gapped up above last week's price action, but have not been able to have a close above 550. All right, so let's see what that looks like on the 4 hour. All right, so on the 4 hour, we ended up forming. I know it's a little messy because of all the lines. Let me zoom in here. So remember that 475 level is that monthly breakout level. I'm gonna write that on my chart. All right. So, and here's that channel. And you can even see like now I'm on a 4 hour time frame. You can see how we've reacted to this channel. You can even see on the 4 hour where we broke out from this channel, came back and retested it right under our 200 and 400 EMAs that have crossed and rejected, right? So we came down, we're back, we got very close to the 475 area where buyers ended up showing up, right? And they ended up forming a chart pattern that's called a double bottom. Now, double bottoms are bullish signals, right? They're especially double bottom at support is a bullish signal. So it looks like wow, SPY should be going higher, right? But remember, like we have not reclaimed this level of 550 because you can see how important this level was. Every time we got to this level, we ended up bouncing, right? We ended up bouncing. When we lost this level here, now this level has become a drop retest level. So for us to say that we're going any higher, we would have to reclaim 550. 550 would have to be reclaimed to go any higher. If you ask my opinion, I mean, I don't get paid to give my opinion in the market, but so far, I mean, and this is even after hours, um, kind of we've been rejecting here. So I would definitely see how we open up pre-market. But as long as SPY can't get above 550, we can't say that we're going any higher. Now, if we do reject here, do we come back down? Each of these areas will be areas that you could look for SPY at, that 523 is an area of support. 501 is an area of support. Do buyers show up in these areas and we can go back higher? And we'll see. We'll see what happens. But definitely above, and you can see on the daily too. Like on the daily, you can see how this area we had been bouncing from this area, right? We were trying to reclaim this trend line, but we couldn't. We failed. And so even though I know this day was that day everyone's talking about in the news, because SPY ended up going from 493. Whew, almost to 548. That's a crazy move. That's like a $60 move. It's a huge move in one day. But since then, we've been kind of consolidating. We have been inside of that candle. So I won't be biased. If I'm able to reclaim this 550, then I'll look for a SPY at 560, 573, and so forth. But if I see that clear signs of projection here, obviously we're struggling. Whenever we're at the 400 EMA, we don't just drop. Like this is a strong level. If you think about this represents 400 daily time period. So this moving line right here represents more than a year of price action, right? So this was the moving average for SPY for almost a year. So it's not going to give that level up easily. All right, so that's what I have on SPY. Let's take a look at the VIX real quick. So the VIX is the inverse of SPY, and it's kind of what I use lately, especially like I've basically married the VIX. Like I'm constantly looking at the VIX, just to help me, especially when I don't necessarily know what's going on with SPY. I just like to kind of study the VIX a little bit more. I know that all this looks like crazy chop, like we've been going sideways, but it's actually been in a range, and it actually helps me to see where I'm at. So let me show you guys what I see. All right, I'm gonna go to most recent. So this is from 2020, and I'm on the monthly chart. Let me grab some water. Parch. Okay. All right, so this is a monthly chart. So I'm gonna grab some levels from here on the month. Oh, not that. I'm gonna mark this high here at 57 on the monthly. Mm, I'm actually gonna take it here. I like it here more, and I'm marking this as a level of resistance. So remember, resistance is the ceiling. I like it here more because we have this area that touched, this wick, even here we touched, these wicks have touched. So you can tell that this is a strong area of resistance. Whenever you see the VIX up here at resistance, that means that the VIX could be rejecting coming back down, and that would mean SPY is going up. So let me make this red for my monthly. All right. So I got 60 as a level of resistance on the monthly. Let's go to the weekly. All right. So I had all this consolidation here. I pretty much marked, I have like this, I'm trying to get the most touches as possible. It won't be perfect just because we have all this chop, but I'm trying to get as much touches as possible because trying to find a level of a breakout. So this area is like a breakout level for the VIX on the weekly. Um, and so if we zoom in, because you can see how these wicks have touched it, and we've kind of come back down. We've gotten a little bit higher. You could even say like 38 is an important level. I'll go ahead and mark it because we have a lot of wicks that touch there too. See, we touch wicks, touch, they pull back, touch, pull back, touch, pull back. So again, the reason I always follow up with the VIX is because the VIX is the inverse of the S&P 500. So if the VIX is going up, then SPY's probably coming down and vice versa, right? All right, so we can see here on the weekly chart how once we had all this consolidation, and finally this week we were able to break out above that consolidation. We touched that monthly resistance level. We actually had gapped up that week, touched it perfectly, and then it ended up coming down. So this was last week when we had that huge rally on SPY. But mind you, this green candle here has broken above two levels of resistance on the weekly chart, right? Even though these two candles are red, they're all of them are respecting this green candle that they're inside of. Unless we started to maybe like close under this candle, then I wouldn't say I would. This candle is still in control, basically saying like it controls whether we go higher or not. So unless this is invalidated, right? I get a candle close under this 23 area and I'm coming back into this chop and just chopping in here, then I would say, okay, I have more chances of SPY going out to bullish. But as long as this candle's in a breakout like this and just demonstrating like these, what looks almost like flag characteristics, I'm very cautious with going along on SPY while that candle is operating from a breakout on the VIX. Let's look at the daily chart. All right, this is something also that I had shared with EYLU because if we look at the daily chart, this almost looks like this is a triangle. Like this is a flag. So we're forming this triangle depending on where we break out, which side we break out to. And then also like, look at this. If I mark the bottom of this, actually, let me delete this. I could just mark the bottom of this candle here. And you can see how today we closed with this doji right at the bottom of our daily candle. So that's kind of a sign right there that basically they're like buyers, there's indecision. All right, cool. Hey, what's up, Dahuda? Thanks for being here. I appreciate your support. So yeah, this candle showing up here in the VIX at the bottom of this daily candle, this is representing indecision, right? So tomorrow it would be interesting to see what SPY does. Also, just like we have those breakout levels on the monthly, here on the daily, you can take a look. Uh, See how this is like the area that we broke out from? When we broke out from this level here, this was basically a sign that buyers had taken control and that SPY was going down because the VIX was going up, right? And we did. We got as high as this level of resistance at 60. And now we've pulled back, but we pulled back precisely back to this level of breakout. And again, I'm going to delete this line so you guys can see. We closed with this doji today, right at this breakout level. So I'm very cautious. If I had to if I was a betting woman, I would be betting that SPY was probably going to be coming back down, but we'll see. So far, though, after hours, we have, let's see, we've dropped to 534. So we'll see. And so because SPY is, the top 500 holdings, so if the S&P 500 is coming down, all of our favorite stocks are coming down, right? Like, I'm not saying that they're all going to zero, but if we have a pullback on SPY, more likely than not, the rest of our stocks that we're usually following will come down. So that's why I always chart SPY. I'm always looking at chart SPY pre-market. I study SPY a lot during the weekends. A lot of times I chart it, I rechart it, just because I like to like come into it without a bias, right? Like let go of my bias as much as I can so that I can see these charts as clear as possible. All right, so I'm gonna go ahead and chart NVIDIA. And these are the stocks we're pretty much gonna go over. We're gonna go over NVIDIA, Tesla, and Meta. And that will be it for the night. So four more. No, three more. All right, cool. All right, so again, so here's the monthly chart for NVIDIA. NVIDIA had basically consolidated here at this 90 level. So I think this is important because if you guys are watching, if you're a Market Mondays watcher and you've heard Ian and he call out these levels, we're about to draw out some levels that are pretty close to what he's bought. And I'm not saying that he gets his levels this way, because one thing for traders, like there's a lot of strategies for all of us to get to the same answer, right? We're all of us have all of these strategies, and all we're trying to do is figure out, is the market going up or is the market coming down, right? But I love when people have different strategies, and even in EYLU, when people tell like a lot, we have some traders that use a lot of their like Fibonacci retracements and those kind of tools, or the Bollinger Bands. I love to see or hear of when another trader tells me, "Man, I got this price level from this tool," and my tool, whether it's different, because I read a lot of my focus is more on price action and like basically finding support and resistance through like price levels, that the fact that we can each of us can come to the same understanding from different strategies, I think is dope. So even if you came to this class today and you feel like, man, my strategy is a little bit different than hers, don't let that intimidate you. Like just use it as in confluence with yours. Maybe you take one or two things from this class that you added to your trading portfolio, like how you trade your bag of tricks, right? On how you come to your best decisions for when it comes to your trades. All right, this is that 90 level. 90 is basically a breakout level for NVIDIA. We because see how when NVIDIA, I'm actually gonna mark this level too. Because we never came back to retest 49. If we ever came to retest 49, that would be absolutely insane on NVIDIA. I hope God not. I am a long-term holder. But I guess I should, right? If I'm a long-term holder 20 years from now, I'll love that I had NVIDIA at 49. That's why I think like dollar cost averaging, that's the name of the game. Recently I've been reading this book called Winning the Loser's Game by Charles D. Ellis. And it's a pretty meaty book, but all in all, like what he's talking about really is like you cannot outbeat the market. Like time in the market beats trying to time the market. Your best bet is really the dollar cost average, especially on these huge dips like this. Like it's great to if you're able to have like reserves where you can kind of invest a little bit more than you usually do into the market because those that will add up way more long term. All right. So on the monthly, so we could see here we have this breakout level. Now, I'm also going to mark the bottom of this breakout candle because sometimes if we lose the breakout level, what I've seen is that the market will wick to that candle that did that breakout. So that level is 85. All right. That's that level. And if you even wanted to, because these each of these monthly candlesticks, these levels, they matter. Just they took a whole month to make. There's a reason that it closed at that number. But I'm gonna make it a little thinner just because it's here. But if you see, that's 86.33. If you look at this wick, I'm only telling you that this level matters because I've seen the market react to it. But look at how this wick touched perfectly to this level. All right. So last month, March 31st, we had a charting class EYLU, and I know you guys have seen my ad. Trust me, I've been looking at it. I'm like, it's dope to come up with those numbers, but the thing is, it happens a lot. Like once you know how to trade, like so, I just had to come up with an ad, and I'm like, oh, you guys, these numbers hit. But if people don't realize like how long it took me to actually be able to like call out these levels, a lot of training, a lot of great mentors. I'll say that. But basically, so if you see like this had been the impulse candle to break out above 90. All of this price action. So since June of 2024, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. Well, okay, 9. For 9 months, we had done all of this consolidation above this level of 109.71. So if you can't figure out why can't NVIDIA get over 109, why do I keep on struggling at this 110 area? This is why, right? You could even mark the bottom of that range because basically, like, you can even see that all these candles respected this 113 area. You can see how all of them ended up like closing right above this level. So you could even draw out that level. No wonder this month, this is actually a perfect drop retest level on the monthly. I'm going to mark it because now when I switch time frames, it'll be a little bit clearer to you what that level means. Right. All right, cool. So look, see, even this month, this candle hasn't closed, right? We got 14 more days, but look at how it's come to retest specifically that area that we dropped off from, but have not been able to reclaim it yet. Okay. But so I told EYLU when we had that charting class, I said, you guys, I'm sorry to tell you, but NVIDIA is going to 90, right? Basically, NVIDIA closing, engulfing this candle here, engulfing these 8 months of price action, entering the territory of this candle told us that now NVIDIA had lost a key area of support. This had been huge support for NVIDIA since June 2024. Now NVIDIA closed on a monthly time frame below that level. That was signaling to us that NVIDIA had lost a level of support. The next level of support for NVIDIA was 90 on the monthly chart. Once NVIDIA lost 90 is when it opened the door to 86. Pretty easy to see when you see it on the monthly, right? Let's go to the weekly. All right, so and this is where we're at now. So on the weekly, I know it gets a little bit more confusing, but I'm gonna try to break this down. So my weekly levels are black, and this is actually a breakout level on my weekly. I'm gonna zoom out and show that to you guys. So if forget it, if you didn't have any of this price action, I can pull it all over here. Look, we made this high at 94. We got as high as 94 before we pulled back, right? We knew that buyers were in control of the video when they were able to break out above this level of 94. So right here, that was a sign that bulls had taken control and we were going higher. So that's why that level is marked, okay? Back even in that August candle, we ended up bouncing specifically from that level. So now we came exactly to this level. That week that we had at the end of March, it was like super bearish week. Last week, we ended up bouncing, right? Well, we gapped down and we ended up bouncing. But remember, unless we can reclaim that 113 area, we can't say we're back to bullish. Not yet. We can't say that. And so I think it's interesting the fact that first, NVIDIA has lost the 50 EMA. Let me show you what happens when you lose the 50 EMA. I'm going to give you an example of another stock that did the same thing. So remember the rule. Once you lose the 50 EMA, usually you go to the 200 EMA. We just saw SPY do that, right? And that was a nasty drop. Look, let's go back to the weekly. We just saw SPY lose the 50 EMA at 560. The 200 EMA wasn't until 475. And we saw it happen. We gapped down all the way to almost perfectly to this level. So that's usually what happens. Let's look at Apple. Apple broke through its 50 EMA back in March, came and retested it, only to drop back down to the 200. And at the two, we actually even got a little bit lower, but ended up waking back up and reclaiming. 168 is definitely a huge area. And you can see, like, even on the weekly charts, you can see where we get these swing points. Look, this is support for Apple because look, every time Apple's got in here, it's bounced. Look, got in here, it's bounced. So you know this is huge support for Apple. As Apple breaks this, you also know that's losing a critical area of support. I would look for it again at my 400 EMA. But so that's basically this is just to show you. Once you lose the 50, you usually move to the 200. Well, NVIDIA's got a little bit of ways to go to the 200. I'm not assuming that like I said, I mean really we as traders we don't get paid to assume. It's we really should try to follow price action and not have too much bias in. But so far what I see for NVIDIA is that yes, we have a bullish engulfing right at its breakout level. Like those are great signs, right? That's a sign of buyers. But like I said, we've come up and we're retesting. Remember where we are on the monthly. On the monthly, we're just here retesting 113. If at the end of the month we can reclaim this level, then we could have, say a little bit more signs like that bulls have taken control, right? A little bit more signs. But until this candle that made us bearish is taken out, this is a engulfed or like I said, taken out, like basically a green candle has come up and engulfed this area and eaten these, telling us that we're going back up. We're going to be stuck in the range between this 109 and all the way to 85 is valid for NVIDIA. So on the weekly, if we lose 85, that would bring us really close to this 200. And there is this level here of support too, around 75. So I'm actually going to set my alerts there. But yeah, I think this is NVIDIA is a great company. You guys follow Market Mondays and EYL and the conversation around AI and NVIDIA and what an important part it's playing in that. I definitely think that this is a great stock to have on your watch list. All right, let's go over Meta real quick. Let me take a look and see if y'all have any questions. Welcome, everybody. Thank you for being here. All right, cool. All right, let's go over Meta. I like Meta. I like Meta for a long term. I'm not yet an investor in Meta because Meta's been running for a while, right? And as tempting as it may be to enter a position on a stock that's been running, I've learned Rivian was the one that taught me not to buy at a high. Rivian, I bought Rivian at $121, but I was a new investor, I was still pretty new. But Rivian taught me you never buy at a high. Sooner or later, that stock is going to come back down, no matter what they say. But yeah, I was back here trading Meta back when it was Facebook. I was trading Facebook back here when it was freaking $90. I have no desire to buy Meta at 513. I just feel like I'm getting cheated out. Okay, so let's go ahead and chart this. So, okay, we're on the monthly chart. Um, all right, so let's go ahead and draw some levels. So we see here where Meta made this high at 381, right? And it had a bearish engulfing. We see this red candle that ate this green candle. We had bearish engulfing right at resistance. That's where you want to see bearish candlesticks, is at resistance. And then we see here finally where we were able to break out from that previous high, and Meta ran and made a new high all the way at 691, almost seven. Actually, we got as high as 741. And everybody was talking about Meta and what a great stock, and Zuckerberg and how he kissed the ring and he was so smart to do that because look at his company. Well, Meta ended up forming, if you know your candlesticks patterns, this is actually an evening star at resistance, right? So now that Meta has formed this pattern at resistance, I mean, your risk to reward here, do you feel like it's better to the upside or the downside? I'll just let you guys think about that. But let me show you somebody else that did that same pattern. Let's see, actually on the monthly as well. Was it Tesla? Let's see. Oh, here it goes. Yep, good old Arista. So this is a stock that I was trading with community. It was a loss that I took. With Anna, I definitely had way too much of a bias, and as soon as I saw this evening storm form at this resistance level, I should have gotten out as soon as I did, but I didn't until we actually broke the trend line. But see, anyway, so what happens when you form these bearish patterns at these resistance levels, right? Arista itself has gone from this close at 92, has gone as low as $58, right? So I'm not saying that Meta's going to those levels. Let's look for some other areas here that we could consider areas of support. All right, I like this area here too. Here at 591, 491, we formed the high, pulled back, kind of formed this flag here. We can saw it here a little bit. We were looking for enough buyers to break above, so we know this is an area of importance. It's 490 level. So far we've come down perfectly, and we've wicked from here so far. So that's good to know. If we lose ever 491, we're going to 428 before we go any lower. So let's go back to the weekly. All right, so on the weekly, here's another stock that has actually lost the 50 EMA. So again, I mean, if we do lose the 50 EMA, usually that rule is that we travel to the 200, and that doesn't happen overnight, right? So always like if you are a trader and you find a good trade through, like always like protect yourself with time. I think too many traders are right on their analysis, but their contracts just don't make it to actually like to prove that their analysis were correct where they make money. So always protect yourself with time on those contracts. All right. Let's see. So there's actually a trend here. All right. And I think I'd say so. Yeah, we kind of have like a wedge forming here. So even from here, you can see where we lost this trend line here and we came back down. We found support so far at this 491 level. But if we lose 491, I'd look for Meta again at 428. And here I'm getting really, really, I'm really watching Meta at the 200. We've already seen what happens when stocks get to the 200. Look at this bounce that SPY had. I mean, if you're a day trader, like those are, or a swing trader, like these are great signals because a contract from here, like you get strong brown bounces from these breakout areas. Remember that 475 area, the 200 EMA as a confluence? Meta would have the same thing basically because look at the monthly again, real quick. This is a breakout level on the monthly. Let's go back to the weekly. All right. So again, what did SPY do? SPY lost its 50 EMA on the weekly, went to its monthly breakout, went and met with its 200 EMA. Where's Meta? Meta has lost its 50 EMA. And so if we get to 381, you already know buyers are going to show up in some capacity here, even if it's retest these levels to the upside. So 381 is definitely an area that I'm actually going to have my alert set. Because will I be the one to short it? I won't. I won't. I'm not too familiar with Meta to actually say I'm gonna short to actually say that I'm gonna short it. I don't really know how its contracts move. I don't trade it that often. But I will be the one to buy it on the way up if buyers show up at that level. All right, let me see. Let me see what I see on the 4 hour. Yeah, it definitely looks like we've lost this trend line for sure. It definitely looks like we could go, and then even here. So this is like shorter time frames, right? Like I like to see where patterns we have, like where we broke through here. So minimum, we get back to 474. If we broke this trend line, usually we come back to retest this low. If we can't, if buyers don't show up here at 474, Meta is likely to get back to 428. And I know they're in Zuckerberg's in the courts for something's going on, but what I don't care what they're talking about. If Meta's at 381, I definitely will be very interested in Meta. They also have earnings at the end of April. So I'm very interested to see how this plays out. So definitely on my watch list. All right. And lastly, last but not least, good old Tesla. All right. So Tesla probably was one of like my biggest trades of this year, actually. And I'll show you guys why. Oh, no, last year. All right, so let's go to the monthly chart. I think this trend line, and I think people like underestimate the power of trend lines. This trend line right here is what really cleared it up for me. So you see, I made that trend line on the monthly. Look on the weekly how we respected it. Every time we basically touch this trend line, we pull back, touched, pull back, touched, pulled back, right? So we know that this was definitely acting as support. I mean, as resistance. That trend line was acting as a level of resistance. Okay. All right. So once we broke out from this trend line, the way that I told the community, literally each of these swing highs, we marked them. So we said this level here because it was very clear, right, that these were level. This was a level of resistance. See how we pulled back here? We pulled back here. Finally, we were able to break out above this level. That was a sign that we were going higher. And the thing is, once you break a trend line, whether it's to the upside or the downside, you usually go back to retest its high. So as soon as we started to break out back here, even in July, we had broken out. We came back though. We failed this breakout. But when we got here to this 200 EMA, this is actually where I entered it. I said, man, I have a good risk to reward here because first of all, Tesla's at the 200 EMA, and back then, let me highlight this area for you. So this was this candle right here. So let me take you to the 4 hour and show you what that looked like. Oh, all right. So we were at the 200 EMA on the weekly, right? But look at how that had this area circled. My RSI was at the floor on the 4 hour. If I get to my daily chart, it was probably like around the same thing. Here it goes. So I took the calls. I was like, I think my risk to reward here with Tesla is pretty good, and I took the calls. I had already seen that we had broken out. We had tried to break out in the past with from that on the weekly, and on the monthly had already actually broken out. Whether it was slightly or not, it was showing signs of a breakout. So I was like, the risk to reward is pretty good to the upside here. This monthly candle ended up closing inside of this candle that actually had just slightly started this breakout. And then finally we took off. So this candle was back in September. September breaking out like this from this trend line was already promising us this top at 387. So y'all can think it was because Trump won the election and Elon became his sidekick. But as soon as September broke out here, it was promising us that we were going to retry this, right? Here we've ended up forming what looks like an evening star. But so far, what we've come down to do, because all the time, this candle is the one that really started this breakout. So nothing has taken this candle out. We've wicked back, but even retesting this trend line, when we break out to the upside, we usually come back and retest those levels, right? Like we talked about on SPY monthly. Remember, we talked about on SPY. We broke out, but we came to retest the level that we broke out from. We do the same thing with trend lines. So we broke out from this trend line, right? We came and retested this high, but we've retested this trend line so far here. Buyers have shown up. Let's look at this on the weekly and see what it looks like. We're at the 200 EMA again, and it looks like almost we want to form what looks like a double bottom. But same thing as like NVIDIA. I mean, unless we can really get above these levels, let's see. I can say like 262. Unless we can really get above these levels to the upside, we're just doing a retest. This could just be a bear flag to keep on coming down, right? But we do have a bullish engulfing off the 200 EMA on the weekly chart. So, I mean, let's not stay biased. Let's look on the daily chart. We have some bullish divergence. It's also looking like a double bottom here, but we already know. I mean, if we break this trend line, we could be retesting that low at 180, but we'll see what happens. But yeah, Tesla's basically just been consolidating at the bottom of this trend line because this trend line was its last area of its breakout. Um, but yeah, not something I would trade. I like to trade stocks that have taken a direction. Tesla still hasn't really given us a direction on what it wants to do. But I just really wanted to show you guys this so you can see the power of like understanding these trend lines. And then the higher the time frame, so like if I made this trend line on a monthly time frame, a monthly trend line would be stronger than like let's say if I went to a weekly trend line, right? A weekly trend line would be a little bit weaker, but stronger than if I had like a 4 hour trend line. So, all right, you guys. So I hope this helped you guys. It's been my pleasure. I'm actually going to start doing more of these free charting sessions just so we can kind of keep up with SPY and what it's doing. This class is recorded, so you actually will find there will be a link that I'll post to this class and it'll be on YouTube tomorrow for any of you that want to rewatch it. And yeah, thank you so much for being here. Last, I'd like to share that I actually started a program. It's actually for people that are new traders to intermediate. It's a beginner's program on how to understand and read technical analysis. The link is in my bio. And for today, only till tomorrow, so for a 24-hour period, it will be on sale for 149, down from its usual price of almost 199. It'll be on sale $50 off, 149 for the next 24 hours. Over that, in that, I basically dive into technical analysis. I go into explaining candlesticks. I explain candlestick patterns. I explain the most important candlestick patterns and chart patterns. I get into understanding trend lines, understanding different time frames, and how to navigate and do a top-down analysis. And I think it's a great beginner-friendly class. And yeah, like I said, it's on sale for the next 24 hours for 149. And if you guys have any questions about it, you can always shoot me a DM on Instagram. My IG is always open for any questions you guys have. Let's see, take a look at the chat. Thank you so much. Thank you guys for being here. You said after you chart, I always second guess my trade. I feel you, Crystal, but shoot me a chart on Instagram. We can take a look at it together. Yes, Carlos, you will have access to the recording. I will post a link to, I'm going to upload it to YouTube. And I will have that link posted to you guys probably by tomorrow morning. Can I do elf? Sure, Jojo, let's do elf. Mm, crazy, 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 crazy that elf is down here. What's going on, elf? Man, absolutely. Hey, Opal, I'm so glad you made it. Man, I used to trade, me and Opal used to be in the same group together. We would trade with Trady Sin. That's where I met her. Man, so when you want to understand like chart patterns, look at this perfect double top at resistance. This is a sign. This is how bears look when they show up. So imagine like you getting an understanding of technical analysis, right? and being able to like you're talking to, let's say, your parents, right? And they're like thinking and like talking to each other like, man, you guys, I think I want to invest into Elf. Your dad heard it on the CNBC and he's like, I think it's a great company to invest into. And then you're able to tell your dad, hold off for a little bit because I see a double top on Elf on the monthly chart telling me that it's probably going to come down a little bit. Like, imagine being able to have these dinner time conversations. And imagine your dad is patient and he waits, right? And he sees his pullback on Elf. And then he's like, well, if you still like Elf, Dad, you think it's a good, like, here's where you want to get in. I mean, that changes the game. That changes the game, especially for us that haven't been able or weren't taught to invest. So, all right, so let's look at Elf. Can you believe that all the way to 33 is a valid retest? This is where I'm setting my alerts. Um, all right, and as long as Elf stays under 55, it has a chance to get to 33. Let's look at the weekly. So far, we've had a weekly. So yeah, we've stayed under 55 and we've lost the 400. So I think 33 is very, very likely for Elf. What kind of position do you have in Elf, Jojo? Call, stocks, puts? All right, let's see. Let's zoom in. Look at the 4 hour. Yeah, like I said, unless Elk can reclaim 55, I definitely see it to getting to 33. I guess makeup hit takes a hit in a recession, huh? But yeah, that's this is major support for it. So I definitely would have my your alert set. Oh, you have a call you bought at 74. How much time do you have on them? You can even see like on the weekly, head and shoulders. Look at this left shoulder, head, right shoulder. You have 2 years on it. Well, I mean, it's up to you. Obviously, I'm not here to give financial advice, but 33 is huge resistance for Elf. I'm not sure if you did exit, you wanted to re-enter here, or you would want to wait, average down here. I guess there's a lot of ways that you can go about it. Everyone has a different risk tolerance. Me personally, I don't like to anything under 40%. I just gotta take it. I just gotta take the L because I can't sleep below 40%. And it's nothing's worth my sleep. Okay, I got a 3-year old I gotta take care of. What did you say about the deal again, and how do we get it? Sure. So if you go to my Instagram, Steffi underscore trades on Instagram, you can go to the link tree in my bio, and there you'll be able to sign up for the next 24 hours. That course will be on sale for 149. Its regular price is 199. And again, I just go over the basics when it comes to technical analysis, chart patterns, candlestick patterns. I go over drawing trend lines. Multi time frame analysis, like going from one time frame to another. We also even talk about psychology and different strategies you can use when it comes to how you want to grow your portfolio and the importance of actually having a strategy when it comes to the market. So it took me a while to make it, but I just wanted to put something out with quality. I saw a huge need for people that were trying to get started with when it comes to options, and a lot of people are lost. So I just wanted to make something with quality and something I wish I had had when I first started. So I think I kind of just consolidated all of that and put it into it's 5 different classes, all put into one actual combined into a master class, and you'll have access to that for 149 if you buy within the next 24 hours. All right, you guys. Again, thank you for being here. Be on the lookout. I will be posting the replay for this class, and I'll also be posting future classes. You'll find them on my Instagram. And once you get to my YouTube, please subscribe so you can get notifications straight from YouTube. I hope you guys enjoyed this. Thank you so much for being here. I appreciate all of you guys' support. A lot of you guys have been on this trading journey with me for a while. I can see your growth, and I'm so glad to still see that you guys are here. Nothing can quite change your life like trading. I started off like as a hostess and making $350 a week. And I'd never even imagined that there was ever a career where I could make that in a few minutes from my home. But it took me a while to understand that was up to me, right? Like being able, anything that you do that you want to conquer takes It will take the very best of you. You can't half-ass trading. You half-ass trading, it will show up in how you trade, right? It will show up. If you come into the market without a plan, it will show up. You may have a one-hit wonder or two, but that's how the market reels you in, right? And ultimately, for you to meet defeat, right? Keep on blowing accounts until you can find a strategy that works for you, until you can be disciplined enough to understand what it means to cut your losses, right? To take profit. Because it's not all about understanding technical analysis. If you don't know how to take profit on a contract, man, you'll easily watch that thing go back to zero. And the market does not care. So, all right, you guys, thanks for being here. Have a great night.